Hello traders and welcome to another video review. Today is Wednesday, 23rd of December 2020. We are going to take a look at the Forex calendar and then we'll do some technical analysis. Let's swipe down towards today's date, Wednesday 23rd. As you can see, some data had been released already. They didn't have much importance for the markets. And during the London session, to be honest, there is not much in the calendar for the traders, but during the New York session there's a lot of data to be released. The first one is 2:30. The gross domestic product data is scheduled to release from Canada, and as you can see, the markets expect the gross domestic product in Canada to decline from 0.8% to 0.3%. So any figure that will be better than 0.3% will beat the expectations, and the Canadian dollar might might appreciate across the board. So data from US PCI core, personal spending, personal income, durable goods orders, unemployment claims, continuing claims, house price index, new home sales, Michigan consumer sentiment index, and crude oil inventories, including the Baker Hughes US rig count. Plenty of data from 2:30 to 7 o'clock p.m. Will be released during the New York session. The most important are durable good orders, unemployment claims, continuing claims, and for those of you who trade crude oil, the crude oil inventories. So what we should do, because we have a kind of a busy day, so let's take a look at the indices. I think the US indices should be analyzed today, and because there is a crude oil inventories data and Baker Hughes US rig count data as well in the menu for today, we will take a look at the crude oil as well. So SP 500 index, what do we have here? Big pin bars. This is the first thing I've noticed on this market, that 3,640 points technical support had been violated. So right now we are trying to break below 3,589. This is the next technical support. As you can see, the most important one is still the one that I have here. This is the technical support between the levels of 3,529, 3,549. Any violation of this zone, you can call it like a demand zone. So any violation of this zone is negative for the markets and will create a deeper correction. But anyway, what do we have here? The recent high was made at the level of 3,000, I think it will be 700, yeah, 3,731. So we have a new high, but as you can see, this is, there you go, this is a clear dodgy candlestick pattern, and since then we got a dip. The low was made at the level of 3,604, so that's pretty much intense dip, but as you can see, everything here was about back up, and ultimately the daily candle closed on Monday. Of course, it closed like 3,690, so 84 points higher anyway, and very close to the open. So there is a demand here that is buying back up all of this losses on the indices, and the last 2 days, as you can see, didn't show any increased volatility. We are trading between 3,674 and the new high 3,733. What should we expect for today? I think this range will be maintained, and ultimately we can go even higher towards 3,733 to test this level. Maybe there will be marginal high but nothing much will change this outlook, because as you can see we have this undecided, this dodgy candle, which means that market traders are undecided towards where they should go next. Moreover, this is clear the bearish divergence here, with between the price and the momentum oscillator on the S&P 500. So the outlook is rather bearish, slightly bearish to horizontal really, and I think that the market will trade horizontally for the rest of the week. We have S&P 500. Let's take a look at the Dow Jones Industrial Average. The situation should be much more similar. As you can see, we got this wedge pattern here, and then we got the breakout, right? We got the breakout as well on Monday. The same candle as it was on the S&P 500. So we got the breakout. Now the thing is, really, will the market follow the breakout? Will the market go lower towards the lows of this candle, 29,435? If this low is violated, then of course we got our demand zone located between 28,959 29,197. So only if this zone is violated, then we can see acceleration towards the lower levels, and it will be, of course, the end of this rising market. For now, the change in the price is not really that big. It's again trading in a range. There is no new high, and the level of 30,334 is right now a very big problem for markets, because it's been attacked 1, 2, 3, 4, 5, 6 times already during the last 2 weeks, 6 times already. So this is a massive technical resistance for the markets, and only if this level is violated, then we can say that of course the uptrend resumed. But because of this pattern, I think that the market will go lower, or it will be trading horizontally for the rest of the week. We got the Dow Jones. Let's take a look at the crude oil, right? Crude oil. So perfect touch of our technical resistance level, 49.29. We got the bearish engulfing pattern here. There you go, bearish engulfing pattern, and then of course we got down candle, very wide range on this candle, or as they say, high spread. The high was at 49.11, the low was 46.07, so that's like a $3 over $3 spread. So that's a wide spread. Let me just copy one of the lines, and we can then do something with. There you go. This is the technical support. Let me just make it more clear. There you go. This is the technical support for the market right now. As you can see, it was touched already on Monday. Now we touched it early today. 46.26 is the level of a technical support, and of course this is the level to watch right now. Any breakout below this level will, of course, be bearish for the markets, and the target will be 43.85, 44.38. So this little zone here, this demand zone here. The key technical support is 43.85. So any violation below this level will open the road towards the lower levels, even below $40 per barrel. So please pay attention to this candlestick pattern. It's a bearish engulfing, very powerful candlestick pattern that occurs at the end of the rising market, at the end of the trend. It usually indicates a potential correction, reversal, or pullback. It all depends how deep we go before some kind of a counter short-term trend is made, right? So right now we got just a pullback right, toward the first technical support. But if this technical support is violated, then we can say we have a deeper correction, or even we have a temporary top, and we are entering kind of a completely different market, which might be, of course, a market good for bears. One last thing that I would like to point out, let me just take the arrow. So if we break below 43, 46.20, 26, we go here, and then when this support will hold, we might back up here, and then if you follow my arrows, you can see that we have a pattern that it's called shoulder, head and shoulder pattern. So it's a potential head and shoulders pattern, which is in very good place because it's after the uptrend, after the rally. So please pay attention to this scenario. It might happen on the crude oil very, very soon. So that's everything for me for today. Please remember, plenty of data to impact the prices during the New York session. Plenty of data to be released. So please pay attention to this. And I hope I see you guys on Monday with the new fresh technical analysis. So thank you very much for watching, and have a very, very, very nice Christmas, Merry Christmas, and I hope I see you guys on Monday. Take care. Bye bye.